Hello traders, investors, and crypto enthusiasts. Welcome to our channel where we bring you in-depth analysis, breaking news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we're diving into one of the market's biggest surprises. Bitcoin surged from $90,000 to $107,000 in just 48 hours, reinforcing a bold prediction by Bitget Research analyst Ryan Lee, who believes BTC could hit $160,000 by December 2025. This rally is fueled by spot BTC ETFs, which have already attracted $46 billion in inflows, and by institutional adoption of BTC as a safe haven asset. Additionally, the Israel-Iran ceasefire has calmed traditional markets, reducing volatility and boosting assets like Ethereum. It's projected to reach $5,500 long-term. We'll break down the technicals, tokenomics, and strategies behind this bullish momentum, including how tokens like BTC Bull Token and Virtual Protocol could capitalize on this uptrend, the role of spot BTC ETFs, how $46 billion in inflows changed the game, Bitcoin's explosive jump from $90,000 to $107K. In 2 days, ISNT, an isolated event at S, the result of a structural market shift. Spot BTC ETFs, approved in January 2024, have already amassed $46 billion in institutional capital, creating unprecedented liquidity. Ryan Lee of Bitget Research notes that ETFs haven't just attracted institutional money, they've also reduced custody risks. While MicroStrategy keeps its keys in undisclosed cold storage, ETFs offer regulatory transparency, pulling in $1.1 billion in weekly inflows. This contrasts with the past, where custody concerns limited adoption. Tokens like BTCBULL, which rewards holders with BTC airdrops, also benefiting. Its price rose 12% post-BTC rally, with $7.3 million in pre-sale demand. Traders should focus on timing and strict stop losses, as sharp pullbacks remain likely even in bull cycles. The key difference between 2024 and 2025? Regulatory clarity. The Genius Act, which legitimized stablecoins and AI tokens, has created a favorable environment for ETFs. Projects like Virtual Protocol are integrating AI for real-world asset tokenization, aligning with institutional maturity. Israel-Iran ceasefire. How geopolitics boosted BTC. The ceasefire announcement quietly fueled BTC's rally. With oil prices dropping 7% and the dollar weakening, traders shifted to risk assets like crypto mirroring 2022's Ukraine war surge, where BTC rose 30%, and memo coins like Pepe and Deutsche skyrocketed 500 to 1,000%. This time, however, ETFs absorb volatility, reducing post-ATH dump risks. Geopolitics has long influenced BTC. In April 2024, Israel's strike on Iran crashed BTC from $108,000 to $95,000, liquidating $193 million in long positions. Now, Middle East stability supports Ryan Lee's thesis. BTC could test $160,000 in 2025 if ETF inflows continue. Tokens like BTCBULL and Virtual are on investors' radars for leveraged plays, but risks remain. A negative CMF and RSI at 61.88 hint at selling pressure. Traders should watch sell orders on Binance, and the $105,000 support level a break below could reopen the path to $90,000. Ethereum and the RWA narrative. $2,600, $5,500 projections. While BTC leads, Ethereum is gaining traction, with long-term targets of $2,600, $5,500. The difference? ETH isn't just a store of value, it's the backbone for real-world asset tokenization. Platforms like World Mobile and Ondo Finance are issuing JPY-backed stablecoins on ETH, attracting $12 billion in TVL. ETH also benefits from Glassnode's MVRVZ score, signaling undervaluation. If it follows CRV's 2023 rally, ETH could surpass $5,500 if ETFs get EU approval. Tokens like Virtual and Link are institutional favorites. Trading opportunities, staking for passive income, Leverage via BTCBULL, which rewards ETH buys with BTC airdrops at price milestones. But mimic coins like Fartcoin and SPX 6900 face volatility. After Fartcoin's $1.5 billion December 2024 pump, it crashed 50% in January 2025, highlighting FOMO risks. Deflation versus fixed supply. Why Tau could outperform BTC long-term. While BTC and ETH dominate headlines, Bitcoin is a 2025 dark horse. With $100 million in reserves planned by Synaptogenics DAO mirrors BTC's 21 meters. Fixed supply but adds deflationary burns when miners buy AI slots similar to Frax Finance. But each token represents an AI network node, not just value storage. Synaptogenics argues DAO is undervalued at $3 billion market cap versus $500 billion in traditional AI. If it follows RNDR's 2024 rally, DAO could hit $1,000 by 2026. Even with BTC at $120,000, however, DAO isn't yet listed on Coinbase or Kraken, limiting liquidity. Tokens like Bitget Bull and Virtual with exchange partnerships show how listings drive adoption. Risks: 10 wallets control 35% of DAO, raising whale dump concerns. But mandatory staking for mining locks supply and smart contracts, mitigating this. Conclusion: BTC, ETH, and DAO in 2025. The end of a narrative or a new era. Synaptogenics' bet on TAO over BTC isn't just technical, it's a paradigm shift. While BTC remains the ultimate store of value, DAO represents real-time utility in AI. Tokens like BTCBULL and Virtual follow similar paths. But TAO's native AI protocol gives it an edge. Take BTC and ETH hold 30 to 40% of your portfolio as a hedge. DAO and Virtual buy below $380 and $0.0003 targeting. DAO of $500 to $600 and $0.0005 to $0.0006. Strategic memo coins. BTCBULL and SPX 6900 offer leverage, but require tight risk management. What do you think? Can DAO replace BTC as a store of value? Synaptogenics ahead of the curve, or taking excessive risks? Drop a comment and share your view. Don't forget to subscribe for real-time updates and join our live deep dives into charts, news, and blockchain trends. Remember, crypto investing demands research, discipline, and patience. Bitcoin may be a strong bet, but never underestimate secure wallet practices. Until next time, may the markets be fair to your trades.